Listen closely, because what's happening in the crypto market right now is not noise, it's a moment that will be remembered. On February 2, 2026, the global crypto market is standing in the middle of fear, uncertainty, and raw emotion. Bitcoin, the asset that defines this entire industry, is trading near the $74,000 to $76,000 range after breaking below $80,000, a level that many believed would hold strong. This drop has pushed Bitcoin to its weakest price zone since April 2025, and the shockwaves are being felt across every corner of the market. In just days, hundreds of billions of dollars in market value have been erased, reminding everyone that crypto still moves fast, hard, and without mercy. Ethereum has not been spared. It is trading near the $2,100 to $2,200 range after losing close to 10% in a short period. XRP has slipped below $1.60, and most major altcoins are deep in the red. This is not a slow correction. This is a sharp repricing driven by panic selling, forced liquidations, and collapsing confidence. In the past 24 hours alone, more than $2 billion in leveraged positions have been wiped out as traders who bet on quick upside were pushed out of the market. When leverage meets fear, the result is always the same: speed and destruction. But this crash did not happen in isolation. The crypto market is reacting to pressure coming from the wider financial world. Global markets are under stress as investors brace for tighter monetary conditions in the United States. A more hawkish stance from the Federal Reserve has revived fears that interest rates may stay higher for longer. In environments like this, risk assets suffer first, and crypto sits at the very top of that risk ladder. When money gets nervous, it does not look for innovation or future promises. It looks for safety, liquidity, and certainty. Crypto offers none of those in moments like this. Liquidity has also played a brutal role. Weekend trading is notoriously thin, and when selling starts during low liquidity periods, price moves become exaggerated. Orders push through shallow order books, stops get triggered, and a cascade begins. What could have been a controlled pullback turned into a violent drop. Once Bitcoin lost the $80,000 level, psychology shifted instantly. Support levels are not just technical lines, they are belief systems. When belief breaks, price follows. Institutional behavior has added to the pressure. Spot Bitcoin exchange-traded funds have seen continued outflows as large players reduce exposure rather than add to positions. This matters because institutions move slower, but when they move with size. Their decision to step back sends a clear signal to the market that caution is the priority. Retail traders feel that hesitation and react emotionally, often selling at the worst possible time. Fear spreads faster than logic. The emotional state of the market right now is reflected in sentiment indicators sitting deep in extreme fear territory. Historically, these levels often appear near major turning points, but timing them is never easy. Extreme fear can lead to sharp bounces, but it can also persist far longer than most people expect. The danger is assuming that pain automatically creates opportunity. Sometimes it does, and sometimes it simply creates more pain. From a technical perspective, Bitcoin breaking below $80,000 is significant. That level acted as a psychological floor for months. Once it failed, momentum traders stepped in, algorithms flipped short, and stop losses stacked below were triggered. The market shifted from accumulation to distribution in a matter of days. In these phases, volatility increases and confidence disappears. Price moves are driven less by fundamentals and more by survival instincts. Altcoins amplify everything. When Bitcoin drops, altcoins fall harder. This is exactly what we are seeing now. Many projects with strong long-term narratives are down double digits, not because their technology failed, but because liquidity is leaving the market. Still, even in this environment, a handful of smaller tokens are showing relative strength, reminding us that rotation never fully stops. Speculation finds a way, even in fear. Regulation continues to hang over the market like a shadow. In the United States, discussions around crypto market structure and regulatory clarity are ongoing, but uncertainty remains high. Investors hate uncertainty more than bad news. Clear rules, even strict ones, allow capital to plan. Vague signals and political delays keep money on the sidelines. Today's price action reflects that hesitation clearly. So the big question everyone is asking is simple. Is this the bottom, or is there more downside ahead? The honest answer is that no one knows. History shows that markets often inflict maximum pain before stabilizing. Capitulation feels unbearable when it happens, and obvious only in hindsight. Long-term holders look at moments like this as tests of conviction. Short-term traders see danger and step back. What matters now is not prediction, but positioning. This is an environment that punishes impatience and rewards discipline. Risk management matters more than bold calls. Size matters more than opinions. The crypto market has not died, but it is reminding everyone why respect is mandatory. Volatility is the price of admission. Today's reality is clear. Bitcoin is down, confidence is shaken, and fear is dominant. But this market has survived moments like this before. Every major cycle has included periods where belief was tested and shaken. February 2nd, 2026 will be remembered as one of those days where emotion ruled the tape. What comes next will depend not on hope, but on data, liquidity, policy, and time. For now, the market is breathing, bleeding, and waiting.